What's up everyone, it's Scotty with MoneyVest. So in this video we are going to be talking about Tesla stock, and Tesla is going to be reporting earnings on Wednesday, October 18th. So we got lots to unpack in this video. We've got the Cybertruck launch, we've got the delivery numbers that we already know of, we've got the margin compression, which Wall Street is very much concerned about, and of course price targets that we are going to go over. There's been certain polls going on with Tesla's ad spend, and a lot of investors are encouraging Tesla to finally start spending money on advertising. So we got lots to talk about in this video. As always, if you enjoy it and find it helpful, make sure that you drop a like, and of course don't forget to subscribe to the channel if you're just joining us for the first time. And I'll also go over in this video what my plans are with the Tesla going into the earnings. And I already did close out my covered call, one of them, for over 75% profit. And I'll go over exactly what I'm planning to do moving forward. So hope you guys enjoy it. Again, links to our Discord and Patreon is going to be down below. We'd love to have you on board. Right now, there is a 16% annual discount that's available till the end of this month. So just about 2 more weeks left. If you want to get access to all the stock reports, members-only videos, trading view charts, everything's going to be included with the link down below. So this right here is from today. So Tesla covered call closed at 76% profit. Just putting in a little bit over $300 in profit here. And I've got 3 more covered calls right now that are sitting with November and December expirations, are sitting anywhere between 285, 275, 312, 315. Around those strikes is what I have. Actually, one of them is in the 250s, and then another one might be in the 260. I just have to double check where my strikes are, but I've got 3 more at the moment that are expiring in November and December. So as Tesla price cuts concede billions in sales, investors push Elon Musk to finally spend on advertising. So the EV maker rarely has ever spent on ads, as we already know. I mean, Twitter is one of the biggest advertising platforms for Tesla, and Elon Musk is one of the biggest ambassadors, if not the biggest ambassador of Tesla on Twitter with the most followers. He's constantly obviously sending out updates and getting people more excited about new upgrades and whatnot. But even without the ad spend, Tesla's been able to do really well, right? Consistent increase in demand, but that has also come at the expense of price cuts, right? Price cuts has been a huge issue for Tesla most of this year, and even though we are still on track to hitting 1.8 million deliveries, margins are a big issue, which of course are representative in the Tesla's earnings. So if you come over to the second quarter numbers, what you'll notice is consistent decline in operating and gross margins for the company. So total GAAP gross margins, they've gone from 25% down to a little bit over 18%. And this is exactly what Wall Street is going to be focusing on. Year over year, 682 basis point compression. And operating margins also have come down from 14.6 to now sitting under that coveted 10% level, down almost 500 basis points on a year over year basis. We'll get to technicals in just a minute, but expectations are also quite low for Tesla's third quarter, with all eyes on the upcoming Cybertruck. So Wall Street expects Tesla's EPS to drop 30% on a year over year basis at 73 cents per share, the lowest in 2 years. And revenues increasing 13% to just a little bit over $24 billion. And analysts are expecting Tesla profit margins to remain below its self-described floor amid fears there will be more surprise price cuts in the final months of 2023, as Elon Musk has reiterated that 1.8 million target. And that's only that the demand is only going to come through as we continue to see price cuts, because we've talked about the auto rates that are sitting at well over 6, 7, 8% for new vehicles, used vehicles. Depending on the FICO score, they can get up to as high as 12, 16, 18% for used car vehicles. So that is, again, basically receding a little bit of that demand and making it more difficult for people to finance vehicles. And that average weekly income needed to finance a vehicle has jumped from 30, which has been on average, to over 42. This was discussed in one of our previous videos as well. Tesla bulls appear to already be betting on a fourth quarter rebound in deliveries with the revamped Model 3 in China and the expected Cybertruck delivery launch. On Thursday, Morgan Stanley analyst Adam Jonas wrote the expectations seem quite low on the quarter. And he said in a research note that it is tough to find an investor who doesn't expect negative revisions out of the quarter. And Dan Ives also wrote on Monday that Wall Street will be laser focused on the margin performance and the overall outlook for fourth quarter as well. So that's obviously very, very important. And Cybertruck execution and Q3 and more 2024 volumes are going to be the main focus for the company as well. Now, this is where analysts sit right now on Tesla. A little bit more divided, but we do have 14 hold ratings with about 4 sell ratings and only 12 buy ratings with 30 ratings total. Moderate buy is going to be that number with a price target, median price target, or in other words, average price target of close to $258 per share. Lowest price target, $85. Obviously, that's, Tesla has been one of the most divided stocks on Wall Street, and we got over $400 as the high end of that price target over the next 12 months for the company as well. As you guys already know, that my fair value on Tesla sits roughly at around $150 a share, which is obviously exactly low as where we were back in April. That would potentially mean, selling us down to 30%. Now, that's not a prediction. That's not a target. That's not a level that I see Tesla going down to. No, it's just a level that's my fair value, right? If it gets down to that level, great. I will be looking at buying more shares. I will be looking at selling puts down in the low 120s, 100s, and that's going to be a happy time for everyone. It's going to be a great time. We can dollar cost average and buy more shares. But Tesla right now trading in this symmetrical triangle, and this is exactly what I wanted to touch on, right? So if I delete everything, what you'll notice is that Tesla continues to trade somewhat like this, where it is pushing higher, getting rejected, selling off, getting that higher low, pushing higher, getting rejected, selling off, making that lower high and that higher low, pushing higher, pushing lower, pushing higher. So it continues to consolidate and coil into this chart. And earnings are obviously due on Wednesday, so it is possible that Tesla makes a big move in either direction. Now, it is not very easy to predict exactly what type of move is going to happen, whether we see a breakout or a breakdown, because usually symmetrical triangles like these, there is an equivalent amount of supply and selling pressure coming in at these lower highs. Then there is an equivalent amount of buying pressure and momentum coming into these higher lows. So there is a symmetrical triangle, meaning that the bulls and the bears are doing an equivalent amount of job, basically same amount of selling and buying pressure coming in both directions. So it becomes incredibly difficult to kind of predict exactly which way Tesla is going to break out to. Now, there is a massive resistance, as we have already discussed, in the $280 to $320 levels. And as we have mentioned before, massive support here in these two areas in the low 200s and even as high as $240 per share. Now, if Tesla does get a huge breakout above this level, if it gets up anywhere past over $280 a share, I'm going to do this. I'm going to sell at least 2 to 3 calls is what I would be selling on that breakout to the upside. Again, I'm not predicting, I'm reacting to what's potentially going to take place. So after the moves already happen, after the breakout, I will be looking at selling calls in the $380 to $400 range. So this right here is where I would be looking at strikes for those call options, because the premiums will be very, very high. And of course, as prices go up, as demand goes up, implied volatility increases, and so does the premium. So you want to be looking at selling calls when the market's on the way up. Now, if you do see a breakdown below this, my current 3 calls are going to be all out of the money. Well, actually 2 of them, depends on how low the Tesla price gets down to, but at least 2 of them, which are going to be at 250 and 285, strikes, are going to be out of the money. One of them may still be in the money. We'll be looking at closing those ones out completely, and we'll be recircling that capital to selling puts, possibly down in the 150s or 120s. Although I don't see the premiums being that high or that lucrative for Tesla at those prices. But that really is the game plan. I've already got hedged Tesla with covered calls. So if it does break down here, we'll be looking at selling them for profit, and we'll be getting rid of them. But of course, if you do get a breakout, then I'm ready to sell more calls at higher premiums, and we'll be looking at capitalizing with that opportunity. But until that, just waiting patiently to see what happens. One of them's already closed today at over 76% profit. So we'll be looking at for Tesla to see where we break out to. So hope you guys enjoyed this video. We've got a very nice resistance and supply sitting between $280 and $320. Support level is going to stay up at $240 down to low 200s with my fair value in the 150s. So hopefully these values kind of help you navigate Tesla stock and how the price action's been doing. So as always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. As always, happy investing. I'll see you all in the next video.